countdown to the new year is on. Joining me today is Keith Bliss of Cuttone & Company, and he will give us his outlook for 2017. Keith, thanks for joining me today.
Thank you, Romy. Good to be with you.
Well, 2016 has been a great year for the equity markets, and of course we did see the rally late in the final quarter of this year, and that did come on the heels of the election. Now, with a new administration entering the White House, there are expectations for regulation, corporate tax breaks. So do you think we're due for a correction?
Conventional wisdom would tell you that. Just given the way that we're sprinting into the finish here for 2016, the extended valuations that you can see, the overbought conditions that we've been living with since really November 10th, post-election, I really don't think a correction is in the offing here. I actually think that the equity markets will move up in 2017 if, and only if, the new administration can put forth very quickly some of the things they want to do about regulation, which they should be able to do because it's really a matter of Donald Trump being able to remove a lot of the executive orders and actions that Barack Obama took. But the other key thing that the Trump administration will put in place, which would be beneficial to the equity market, to companies, to industry, and therefore the equity markets will be related around tax policy and also around trade. So my prediction for 2017 is we'll certainly see the equity markets move higher. I do believe that it will be a choppy year, similar to what we saw in 2016. A lot of people forget we're a long way from February 11, 2016, when the S&P 500 was at 1867, and right now we're at 2265. I think we'll have some volatility, probably not as pronounced as we had in 2016. It will not be a straight moonshot up unless the Trump administration enacts some of the things that they want to do around business and energy and commerce very quickly in the new year. But I think over time, given the fact that we will have for the next 2 years a Republican president, a Republican House, and a Republican Senate that has very pro-business, pro-growth, forget about ecology, forget about regulations. They're going to do everything they can to prime the pump, and that's going to be good for equity markets. We're going higher in 2017.
And Keith, we can't have a conversation about policy without discussing monetary policy. Of course, there are expectations that the Fed will continue to hike rates in 2017. So what are your expectations, and what's the real milestone here?
Well, certainly if the economy continues to grow and gets back on a higher growth track, the Fed is going to be forced to move a lot quicker than they're telling us they are now. They've projected, and this Fed, unlike any I've ever seen since I've been tracking this, is totally transparent. They telegraph every move they're making. And they've told us that they're probably going to hike twice in 2017. If the pace of growth quickens and inflation continues to move up, both wage inflation as well as pure inflation on goods and services, they're going to be forced to move faster. I actually think that's going to be the case. And again, if the Trump administration is able to enact a lot of the pro-growth strategies that they want to, we're going to start having 4.5% GDP growth. Inflation's going to kick up. The bond yields are going to move up pretty rapidly, and the Fed is going to be forced to try and tamp that down. I think that they're in a bit of a pickle where they have been for 2 years because this economic expansion is now 7 years long. That's very long in the tooth as historical post-war economic expansions go in the U.S. So it's going to be really interesting. Again, I think they successfully threaded the needle with their monetary policy and got a gift by a president being elected that will take care of fiscal policy and pro-growth strategies for them so they can back off their own gas pedal for a while. But we're going to have to see if they can thread the needle to keep us out of recession while priming the pump in 2017.